Hey, welcome back to The Dive. Bitcoin, AMC, gold, and commodities. We're here today to talk about these and what's going on in the market. He is the president and chief market strategist of InTheMoneyStocks.com, Gareth Soloway. But quickly, before we bring Gareth on, don't forget to tap that subscribe button so you don't miss out on our future content. Hey Gareth, welcome back to The Dive.
Hey, thank you so much for having me back. It's wonderful to be here.
All right, so let's talk the drama surrounding Litecoin. Earlier today, what amounts to a fake news article on a partnership with Walmart was released before being retracted. What impact do you expect this to have on crypto as a whole, if any?
Yeah, so I mean, just a wild situation with Litecoin, and you have to look at this and say it does shake the foundation of cryptocurrency a little bit, not to the point where I think long term it has implications. But if there's one negative, it could bring the regulators down a little bit more harshly on cryptocurrency. And the key is, the question is, well, what really went on here? Was it a pump and dump, meaning that someone bought a lot of Litecoin ahead, then dropped that story, that fake news story, and then sold it all into the big pop all the way up to $228 before it came crashing down? I mean, or did someone just have a big position and want to pop it and then unload it? I'm sure there is some sort of reason that was put out there. No one does that and then doesn't try to profit off of it. So ultimately, my guess, there will be an investigation. You'll probably hear from the likes of Elizabeth Warren talking about, hey, we need to look into this. We need more regulation in cryptocurrency. And honestly, it does explain why Bitcoin and other cryptocurrencies are under a little bit of pressure today, because there is the chance that this could bring a little harsher regulation in the cryptocurrency area.
All right, so the Federal Reserve's Robert Kaplan and Eric Rosengreen have announced that they would sell their stocks by September 30th. The statement comes as the Fed officials were questioned about their investing activities during a year in which central bank initiatives helped to keep financial markets afloat during the COVID epidemic. What are your thoughts on this? It seems like a big deal, right?
Yeah, so this is something I tweeted on last Friday, and it was just such a kind of almost like a slap in the face to investors. So you think about it, right? The Federal Reserve can arguably be blamed for a majority of the bubble that we're experiencing in the stock market and in assets, right? They're the ones that are just printing and pumping money in. They haven't even tapered yet, even though that 120 billion that they're pumping into the system monthly was done as an emergency measure at the beginning of the COVID crisis. They've been doing quantitative easing since 2009, and they have really never stopped. So, I mean, the printing of money is ridiculous, which has inflated stock prices, right? So then all of a sudden, those two Fed officials, they're like, oh, well, we don't want to have people misconstrue us holding stocks, so we're going to unload them. And to me, that's very kind of shady, because you have this situation where you have to ask yourself, do they know that the party is coming to an end? They've inflated this bubble. They've invested in stocks all the way for this run. And now they're saying, oh, well, we don't want to have people question our motives, so we're going to sell our positions. And to me, again, and one of the things that also was they said in the release that they might do index funds or they might go into cash. And it's almost like, well, they had to say the index funds just to make it so it wasn't so obvious. But, they're basically telling you here that party's over. And it seems kind of disingenuous to, at this point in the cycle, when stocks are at these ridiculous levels, that this much money has flown into the market. Remember, this year alone, there's been $1 trillion in retail money that has flown into the market, which is more money from the retail investor side than in the last 20 years combined. So all this retail money is now in the market, and the Fed's like, oh, well, we're not going to invest in stocks anymore. We don't think it's ethical, so we're going to sell. To me, I mean, that bothered me. I mean, it really did. And I understand if their motive is genuine, but the way it looks, or maybe is just really ridiculous.
Speaking of your tweet, we also heard you say on Twitter, you think the Federal Reserve will no longer exist in 10 years. Can you give us some color on this?
Yeah. I mean, it's nuts, man. It's everything that's going on with the Federal Reserve just makes me more and more wary about what the future holds. And, whether it's, the end of the Federal Reserve, which is where I actually think this is all headed, and whether it's 5 or 10 years from now, where the collapse that's going to be created by what they've been doing is going to be so monumental that the people will demand a new system that has restrictions on the ability to not only create debt by the government that is now on taxpayers' shoulders, but also the Federal Reserve's ability to just print dollars whenever they want to. And I really, truly believe that whatever comes out of this will be a better system, but there's going to be some hardships that go through for, the country as a whole. So, and I think, by the way, the world for a whole. I mean, we're not exclusive here. Every country's been printing money. Every country's been pushing interest rates to ridiculous levels, and something will arise. And my hope is it's somewhat of a global currency that comes out of the ashes here, where, you don't have as many cross currents and exchange rates and all this kind of thing. Maybe a North American, South American currency, or maybe a global one. But there's definitely something that's coming, folks. And again, I don't necessarily advise people to trade directly off of that fear right now, because it might not be for 10 plus years. But just keep it in the back of your mind. And it's another reason to like gold. I think you got to be someone that diversifies in some gold. And also, when cryptocurrency gets low enough, I really do think that Bitcoin and Ether might be the future kind of digital gold that you also want to diversify in. So again, I don't want people to think that you just invest in those alone, because that's not diversifying, but you want to spread your dollars amongst multiple asset classes. And I think that's the smart way to do it.
Okay, we'll hold that thought for a moment. We'll talk about gold and crypto in just a minute. But first, I would like to ask you, according to some, China's new digital currency electronic payment system would eventually replace real currency. Do you believe this is feasible at this time? And if so, what do you believe the dollar's influence will be?
Yeah, so the digital yuan, China already launched it. The Fed has only briefly mentioned the chance, a small chance of creating it. I've been on this front saying that China is the leading player here. They see the future. They know that eventually, money that you hold in your hand will no longer be around. Not to get too sci-fi, but don't be surprised if in 10 or 20 years, people have a little chip that they have the option of implanting in them that they can just, wave their finger at the payout place and pay for something like a cup of coffee at Starbucks, something like that. So I do think it's going to digital. I think China's goal is to become the new reserve currency of the world, which again is a huge negative for the dollar if that does occur, because again, countries around the world hold trillions in dollar reserves because it's the reserve currency. If that stops being the case, you're going to see a massive selling of the US dollars on the open market, and our US dollar will go down sharply. So I think that you have to kind of look at what the foreground, and by the way, I don't mean to be all fear mongering and stuff like that. These are all things that down the line will likely occur. In between there's going to be so many opportunities to go long and short equities that we can make lots of money as swing traders. But I think you do need your eye on the long-term potential catastrophic issues so that you can kind of gently position yourself to cushion those effects. So again, whether it's gold or whether it's, buying and diversifying in currencies or other things like that, you definitely want to be aware of that.
So you were sharing some graphs before you came on camera. Do you mind sharing some with our viewers?
Yeah, so let me go into some of the charts here. I'd love to show you guys what I'm seeing on the S&P, and it's really fascinating, in fact. So this is a chart of the S&P, or the SPDR ETF, which tracks the S&P 500. And what's so interesting about this is that this is the COVID low down here, right? So we've been inching up here. You can see you've kind of come down and kissed the level, then you hit it a little bit more, you hit it twice, then you pierced it. And basically what this chart is showing you is that the initial move to the upside was very powerful. And the way you see this, and this is just I hope it's really going to enlighten people, is that look at the distance from the line and look at the length of time away from the trend line. That's the longest and the highest distance. And then notice how you just kissed it here. You didn't officially tag the trend line. The next time it bounced up, it went less distance, less height, and this time it actually hit the trend line. Less distance, less height, hit the trend line twice. Less distance, less height, pierce the trend line. Less distance, less height, pierce it by even more. Then it confirmed below. And look at how it's not able to get above the line. And now we're curling over here. And what this is showing me is that the strength of the rally is dramatically waning here, to the point where we could be on the verge of a little bit of a correction in the market. Now, we've had small pullbacks, 3% pullbacks or so in the S&P, nothing to the realm of 10%. I do think this is on the verge of a bigger 10% correction, which, by the way, in the scheme of things is not that big. We're up huge off of the COVID lows. but I think it's going to catch a lot of people off guard. The other chart I want to show you guys is the QQQ, the NASDAQ 100. Take a look at this. Such a fascinating chart. So you have this trend line, right, going all the way back to 2019, touches this high, and then look at what we recently touched right there. And you can see every time you hit it, you get a pretty powerful pullback, oftentimes to the low end of this trend line. So if this chart is any indicator, we could be headed on the QQQ down to this trend line of support, which is right around 350 on the QQQ ETF. So that's the NASDAQ 100 for those of you that aren't familiar with the QQQ. But bottom line is the markets are showing a lot of weak signals here. The fact that we just talked about those Federal Reserve presidents saying, hey, we're going to sell our positions, basically, it kind of is almost too good to be true that that's the indicator, but we'll know in the next couple months if the markets do pull back. But really, again, charting is my bread and butter. It's what I love to do. It tells me so much about the probabilities. Nothing's 100% in trading, but what the goal of a good trader and swing trader is to put the probabilities in your favor and then go with that direction. And I always liken it to being the casino versus the gambler, right? The gambler, at best, close to 50-50 odds. The casino, yeah, you might lose one or two, players here and there where they take big money from you at the casino, but overall, you consistently make money, and that's the goal here.
Okay, Gareth, let's talk about Bitcoin as well. We would love to see your charts on this one. How do you read the recent news in El Salvador? And also, we understand it's not part of your process, but where do you think Bitcoin lands in 5 years?
Yeah, so 5 years is a long time away. And I do want to show you the chart on Bitcoin here. It's got some fascinating replications to past cycles. So here's Bitcoin, right? And here you can see how we came up just underneath this little pivot high right here. This again was around 54,000. We went to about 53, and then you saw a little bit of a dump. For the longest time after I called this move down to 30,000, I said it could retrace to what I call the scene of the crime, which is this trend line right here, at which point you'd likely see some downside action. Now, if we go back, and this is where it gets really kind of cool, let's go back to previous cycles. So if we bring up this chart here, which is the 2013 move to the upside, you can see we ran from basically $100 on Bitcoin to $1,250. You then corrected to 500, bounced back to 1,100. So notice how close it was to the high of 1,250. And you again got back to 1,100. And then you fell down to 100 right here, right? So my point is here, if we go back to the Bitcoin chart, this top of 65,000, the run up to 65,000, which was just a meteoric run to the upside, this drop is very reminiscent to that initial drop that we saw in 2013. And then this rally is very much like the rally we saw back in 2014 before the next big wave of selling. So again, if we just go back to this chart, you had the big run up just like we saw to 65,000, the big dip to 30,000 in 2013, it was 500. Then the bounce back, we saw about 53,000. It was 1,100 back in 2014. And then the idea being is that you're going to roll over and have a bigger move down to a price target of around 20,000 to 18,000. And that would probably be in the next, I would say in the next 6 to 8 months, I would guess. Now, the last thing I want to show you guys here is looking back at the 2017 cycle high. The question again is, does it replicate? And the answer is it does. Here was your run up in 2017 to 20,000, dip to 11,000, bounce back to 17,000, down to 5,000 or sub 5,000. So again, just going back to what we've seen here, you have to think that this is that same run up before the next leg lower, which takes you down to my 6 to 8 month target of around 18 to 20,000 down here. Now, you asked the question of, where do I see Bitcoin in 5 years? I actually think Bitcoin in 5 years is north of 100,000. I actually do. But I still think that there's a deleveraging event in this market that has to be, you have to flush out a lot of the weak hands. There are so many investors that are the hodlers, the ones that they swear that they're going to hold forever. But we'll see when you start to see a bear market in equities, in crypto, and all of these things, whether or not that holds true. I think you have to flush a lot of people out. I still remember in 2018, after that initial 20,000 high, you got to a point where people were thinking that Bitcoin was done. You got to a point where CNBC didn't show the ticker of Bitcoin on their screen anymore. And that was where the bottom was. So we haven't seen that yet on Bitcoin. There's still way too many bulls. It's got to go lower, in my opinion, before it finally rallies and goes and becomes the future digital gold.
Okay, so we're expecting another dip from Bitcoin in the near future?
Yes. Yeah, I do believe another dip is on the horizon. Absolutely.
All right, what about AMC? AMC is a name everyone is talking about on social media. How do you read this chart? And how do you view all the social media traction?
Yeah, so I mean, the AMC, excuse me, is we know it's a Reddit favorite. It's actually had a good move up today. It's up about 4 to 5%. I actually read that Disney was going to release all of their movies in the theaters going forward, which is a positive thing for movie theaters versus them also releasing it on Disney Plus, which they've done recently. Having said that, I just can't get behind the valuation here. The stock, again, is just too high. I really do think the movie-going experience has changed. Just speaking from my own perspective, I don't look forward to going to a theater and sitting in a crowded theater where people are sneezing around me. Even if it's just a cold, it doesn't really excite me to do that, nor does the cost of popcorn and candy for the kids and all those other things. So the ease of buying a 80-inch TV now, it's not even that expensive. You can create your own movie theater at home. I'm in the camp that even if AMC goes a little higher here, it's a short, longer term, and eventually the dilution that the company will play out, and it's probably a $20 stock. Won't be the popular sentiment on Reddit and on Wall Street Bets, but that is where I think it's going.
Yeah, I think a lot of people share the same sentiment as you on that one. Okay, so shifting to gold. What do you think is the biggest headwind for gold over the past year? Do you still stick to your $2,100 price target for 2021?
So yeah, I do believe that 2021, by the end of the year, we should see a move close to $2,100 in gold. That would basically bring us back to the highs that we saw at the end of last year or mid last year, 2020. And the key here again is obviously we need to watch some trend lines. So if I show my chart here, this will help get us there. You can see this pivot high here on the GLD. This is something I'm watching. If we take this out, this would be a big breakout on the GLD. And likewise on spot gold, that would bring us probably to a quick move up to this end of year high of around 2,100 or around just over 200 on the GLD. But again, if you think about it just from a perspective of what is going on is we're already seeing the economy starting to weaken, right? The jobs number recently, just a couple of weeks ago, things like that, you have to wonder, can the Fed really taper? Can the Fed stop printing the money? My estimation is they're going to try, and then we're going to get into a key economic drought, and they're going to have to step up the stimulus again. It's basically like a drug addict, right? The Federal Reserve is the drug pusher, and the market is the drug addict, and the addict just needs more and more and more drugs to get the same high and continue to go higher. And again, any sort of pullback, the market goes into this withdrawal symptom of a freak out. Same thing with the economy, right? With spending, because stock prices are now tied so closely to the performance of the economy. So ultimately, if there's more dollars continually being printed, then gold, to me, even on dips, is a buy. Again, I think within 2 years, you could be looking at close to $3,000 an ounce even.
Have you followed uranium or natural gas? Do you have any reads on either of these commodities?
Yeah, so uranium has just been an amazing mover. One of the stocks I was looking at today was this URNM, which is it's North Shore Global Uranium here. And this has had an amazing move up. It was already having a good year in 2021 and has just taken off to the upside. So, again, if you want the future of potential move in gold, look at this move right here. Once gold breaks out, it could easily do something like this. Now, uranium, again, there's a lot of spec money in here. I think that there's probably some institutions fueling this surge and looking to take advantage of this. It almost looks like a Reddit type situation. And I've noticed a lot of smaller investors kind of screaming about uranium. What that does to me, anytime I see a lot of smaller investors piling in a trade, it makes me wary of it. So I'm not short this or uranium as a whole, but I certainly would look for a pullback probably to this former level right here. So you can see there's a gap fill right here, former pivot high. So, there's actually a decent reward to downside. Now, again, got to be careful here because obviously this could go north of 100 very, very quickly. But I do think, again, patience will bring this back in, at least in the short term. Now, that's the short term view. The longer term view goes along with a lot of the other commodities, which is as the dollar gets diluted more and more over the next few years, you probably see uranium head higher. So, I mean, if you have a 5 or 10 year horizon, I probably would say hold uranium. If you're shorter term, you would probably want to look to take profits on it.
Gareth, thank you so much for taking the time to do this. Where can our audience go to follow your commentary?
Yeah, so the best place to go is Twitter. Follow me at Gareth Soloway on Twitter. The reason why I say that is because everything I post is free. I post charts for free, information for free. And then if you like what you see, if you think it's worthwhile and you want more, then In the Money Stocks is where I have my service, inthemoneystocks.com. And you can always come sign up for verified investing alerts there. Thank you so much for having me. It was really a pleasure.
To our audience at home, thanks so much for watching. And don't forget about that subscribe button on your way out.